I never have to pay taxes again. Just think about it.
Hey everybody, there is actually a whole segment of TikTok that is dedicated to investing and finance. I'm actually going to react to them from a financial planner's perspective. So I follow an account on Twitter. It's at TikTok Investors. Thank you, TikTok Investors. It definitely gives me laughs. All right, so let's dive into the very first video.
I can get paid in Bitcoin and then also buy anything I need in Bitcoin. I never have to pay taxes again. Just think about it. Who's gonna come and get me for not paying my Bitcoin taxes?
I'll tell you who's gonna come get you for not paying your Bitcoin taxes: the IRS.
It's decentralized. And I recently just got a crypto visa, so like I can get my groceries. This is
Okay,
revolutionary.
Hilarious.
I'm just
let me make this very clear. Bitcoin is taxable if you have a gain from selling your Bitcoin or transacting with your Bitcoin. The IRS has made this uber clear. We are responsible for self-reporting our income or gains from Bitcoin. Your crypto exchange may even be sending you a 1099 tax form at the end of the year that shows some proceeds from buying and selling cryptocurrency, and they report that to the IRS. So the IRS is already going to know that you're transacting in cryptocurrencies if your exchange is sending these documents to the IRS. So yeah, crypto is taxable. It's extremely taxable. All right, next video.
What's up?
What about low-cost index funds?
Financial influencers be like, get low-cost index funds because they're low cost, with little regard to how they perform as a retirement plan. But guess what? They freaking suck as retirement plans because they produce sucky retirement income. Put those inside of a 401k or Roth IRA, they double suck. Don't believe me? Look up the 4% rule. I'm Curtis Ray. Don't suck.
Don't suck, guys, by using a 401k or an IRA. This is absolutely ridiculous. Every time I see videos that TikTok Investors puts up of this guy, honestly, my blood pressure goes up a little bit because, so for those of you that don't know, this guy is actually an insurance salesman. This guy wants you to pay premiums for this life insurance product that he constructs with all of these bells and whistles. Most people don't even know what the hell they're even buying. These insurance products, you'll put your premiums into the product, but there are front-loaded fees. You want to make sure that if you're going to go the insurance route, it's got a purpose that it's serving for your financial plan, and it really, really, really is needed. I'm not saying that all life insurance salespeople are bad, because they're not. I'm just saying this guy shitting on 401ks and IRAs and low-cost index funds is absolutely absurd. We're talking about tax-deferred growth that's compounding, okay, with low fees if you're using low-fee index funds. It probably makes most financial professionals' ears burn. Okay, all right, on to the next one.
If you made $400,000 in a single year, you would only be going home with a...
Oh God, give me a break. I'm gonna address this pretty briefly. So, if you make $400,000 a year, you're gonna be going home with $400,000 a year.
No, you won't.
Under Joe Biden's new tax plan. Any money made over the $400,000 will be taxed. So for example, you make $425,000 a year. 62% of 25,000 is, I believe, 15,500. So you'll be going home with $409,500 a year if you make $425,000. So let's use brain cells before we post things on the internet. Thanks.
I love her confidence. Her confidence ratting on the other guy is extraordinary, but she's wrong too. So people just don't understand how taxes are calculated, tax rates, effective tax rates versus marginal tax rates. The first guy basically was saying that under Joe Biden's tax plan, it could create a tax liability as much as 62%. He's basically looking at Joe Biden's tax plan probably a California state income tax at the highest rate to get to that 62%. But he's saying that if you make 400,000, 62% of that 400,000 is going to be gone. And that's not true, because our tax system is progressive. It's going to be like an average tax rate. That's what our effective tax rate is. It's an average tax rate after your income is moving through all of the brackets that it needs to move through. So that's incorrect. This girl is basically trying to explain, no, that's not right. It's only going to be, you know, the income above the 400,000. Well, that's not the case, that you're going to take home 400K and you're only going to be taxed on the amount over 400K. 400K is not tax-free. It's going to move through the tax brackets. You're going to end up with an average effective tax rate. So, whew.
I think what you and I need to pull from Warren Buffett is that asymmetry means there's low downside and there's massive upside. 401ks and IRAs in the stock market do not have big upside. Like the S&P 500 averages just shy of 10%. And when you take your ups and downs out of it, it's actually significantly less. We as a people...
Okay, first of all, when you say the average return, and then you say, and then when you take the ups and downs out of it, well, the average is taking into account the ups and downs of it. So there's that.
For me, it most certainly strengthens my approach to investing in real estate because I found something that works and I would just do it over and over and over again. In fact, I buy a house just about every single day.
I buy a house just about every single day? What? Okay, so again, this guy is shitting on 401ks and IRAs. Obviously, you guys know I disagree with that. I think that 401ks and IRAs are great. It's something that is very accessible to a lot of people. Look, not everybody wants to manage a real estate portfolio, okay? So, you know, some people, they really enjoy the fact that they can invest in stocks and bonds or REITs, and it's hands off. You're not having to touch anything. But with real estate, it's tangible, right? They don't want to have to deal with renting out homes and dealing with maintenance and dealing with things breaking and their tenants calling them in the middle of the night. And it's not for everybody. And so I don't know what this guy's talking about. He's buying a house a day. I don't know what the hell that's about. That seems unreasonable. You know, I think it's okay to be diversified across multiple asset classes in multiple different ways. But I don't get when these guys are just like, they're usually trying to sell you something. You know, this guy probably has a real estate course or something, and then the other guy sells insurance, of course, right? These guys that are trash talking retirement plans like 401ks and IRAs, they have some type of ulterior motive. On to the next.
And I'll get to that in a second. So once your parents receive this money, you've gotten a tax deduction for paying it to them, because anytime you're an employer, you actually get to write off salary and compensation to the people that work for you. And then when you're talking to your parents, you say, okay, you're retired, you most likely don't need this money. What I need you to do is to gift me that money back. Now, if it's one parent, they can do $15,000. If it's both of your parents, they can do about $30,000, and they get to write that off. So that money comes back to you tax-free. Now, once this money gets to you,
Tax-free, he says.
it came from your business. It's gone to your parents. Your parents have given it to your own personal bank account, not the business bank account. And then what you do is you take this money and you pay off your student loans.
Okay, he's saying that if you own a business, you can take money from your business and pay your parents, and they can gift you the money back to your personal account. A little whoop, whoop, tax-free. Okay, so what is actually happening here is he's transferring a tax burden to his parents because his LLC is going to have to file 1099 income to the parents. If his parents are in very, very low tax brackets, then, you know, maybe there's something there. So yeah, there's a lot of bad financial advice on TikTok. Try to educate yourself and not just blindly follow somebody's advice because it might be wrong. All right, I hope you got a good laugh out of this. I know I sure did. If you want to see more videos like this, be sure to comment, let me know. There are all kinds of reaction videos I could probably do. Ciao.